station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
Awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic weekend. We got the SPY trading up 3.14% at 582. Get the composite roaring up 4.2% at 18,682. Dow Jones Industrial trading up 2.74% at 42,379, with that dollar strong as well, trading at 101.81. Bitcoin off 1.37%, still above 100,000. Crude oil soaring 1.44% to the upside, with the gold contract trading off 3.27%. We're going to go a little bit different here just for the beginning of the show. It is a Monday, and you know what that means. It means we are joined by Steve Rhodes of Mastering Probability. This is a fantastically thorough newsletter. Strongly recommend checking it out. He goes over quite a bit of different metrics and charts to look at. Of course, we have Steve on every Monday. You can catch his show at 11 a.m. Eastern Time. That is the Trader's Edge right here on TFNN. Steve, how are you doing?
Doing great, Jacob, and thanks for having me on early today. I appreciate it.
Absolutely. What are we taking a look at? Quite the rally in the indices. Of course, you have gold coming off a little bit as well, kind of mirroring, at least the inverse, that movement up in SPY.
Yeah. You know, one of the things I was out of town celebrating my youngest grandson's 1-year-old birthday, and recorded the show early on Thursday, and then I busted my laptop before I left, and so it was really kind of didn't have all of my tools to take a look at. So one of the questions that I asked myself this afternoon as I was preparing for the show is there something that I should have seen that would have told us to expect or anticipate today's rally? And it turns out the answer to that question is yes. Now, folks that listen to the Trader's Edge show or have heard me discuss the equal-weighted ETFs know that it's the equal-weighted ETFs that typically really point the direction. So what do I mean that I should have seen something at the end of business last Thursday? The top portion of this chart, Jacob, shows the ETFs, the equal-weighted ETFs, for the Qs, the S&P, and the Dow, and in order. And then below that, you've got the Qs, the SPY, and the Dow Diamonds. On Thursday, the equal-weighted ETF for the Qs went ahead and negated a TD9 count top. Those folks that listen to the show know that that's one of the tools that we use to help identify tops and bottoms. Those were present at the lows back in April out there. And on Thursday, each of the three equal-weighted ETFs, the Qs, for the S&P, the RSP, and for the Dow, the EDOW, they all negated their TD9 count tops, and they suggested that we should see a further rally. It is that we did not get that same pattern inside the weighted ETFs, the Qs, the SPY, and the Diamonds, not until today. So really should have seen, and so it's really important. This is really a lesson for folks out there that trade any of the typical ETF vehicles. Look at what's going on inside the equal-weighted ETF. So that was the first thing that I wanted to be able to share with you and the listeners out there, because it's a really valuable tool.
Sure.
And especially for folks that were going into the weekend short, would have given them maybe a reason to pause and say, maybe I should go to neutral. Maybe I don't go long or something, but maybe I should just simply go to neutral. Of course, even when things sound really wonderful, just like when they sound horrible, I like to be able to look at the other side of the equation. So what is it that we're maybe missing about today's rally, or what are the concerns that one should have? One of those concerns for me, if I get this to work, is coming from the New York Stock Exchange. Now, there's a couple of different things out here. So the top portion of this chart is the New York Stock Exchange price. Below that is the actual is the actual advanced decline line, and you can see that we're getting very close to a new all-time high in the advanced decline line. Forget that would be a very bullish signal. We're not there yet, but we're getting pretty darn close. What concerns me is I take the advanced decline line and I look at the difference between the 39 and 19 period exponential moving average. That creates the advanced decline oscillator. That was developed 30, 40 years ago by Sherman McClellan. It's a terrific tool out there. And here what we have in the indicated advanced decline line, that'd be panel number 3, you'll see that green diagonal line where we're seeing lower highs.
Yes.
Yeah, we have higher highs in price. So that's a divergence that suggests that we should see some type of pullback or retrace. Doesn't mean that happens today or tomorrow. We are also in overbought territory. Anytime you get a closing above plus 150, there's 2 things that come with it. Number 1, tells you you're overbought. Number 2, it tells you should see future highs. That doesn't mean tomorrow. It could be next week. It could be next month out there. The second, another element that has me just a bit concerned. So positive is we're trading below the 50-day exponential moving average for the spot VIX. That's the very bottom panel. And the spot VIX 50 days at 25.15, we're right around 1886 or so. But we're right now, when I take the spot VIX, the only time I've ever used a Bollinger Band, or really ever used Bollinger Bands, is for the spot VIX. And I use it different than the normal setting. So this I set to a 50-to-1 setting, and it works out pretty well. And when we get down towards the bottom of that Bollinger Band, it says, be cautious. You're getting ready to see potentially a turn inside the spot VIX. So this chart here has a little bit of concern. The hair in the back of my neck, if I have any, is standing up just a little bit out there. What else does Stevie have concern with? Well, it's the DAX. So the DAX and the NDX 100 are fairly well directionally correlated. I'll show you momentarily. When I take a look at the DAX charts, first on a yearly basis, the DAX is as strong as anything out there, stronger than U.S. indices out here. We're trading well above last year's high. But when we take a look at the monthly time frame chart, it's going to go ahead and form a TD9 count topping pattern this month that will complete that pattern in June. It means the high could be this month, it could be next month out there. The weekly chart today, right now, we are trading above a TD9 count pattern. And if we close Friday above 23,475.88, that pattern gets negated. If we close back below that, that pattern is still intact out there. And that would go along with the daily TD9 count top that completed today. So what folks should be looking for, and I apologize, I didn't grab the number, whatever today's high is in the DAX, if we start trading above that tomorrow, and this is really important because the DAX is going to open at 3 o'clock, 3:30 in the morning.
Right.
Out there, if we start trading above that, especially at 11:30, if we close above it, that pattern gets negated, and that would then add the idea of a further rally inside the U.S. markets out there. Here is the chart for the DAX and the NDX 100, and the very bottom panel, this is taking a look at a 5-day correlation, and when bars are above zero, it tells us about a directional correlation that's out there. So the DAX having that topping signal, really important in overnight action for folks to be watching that, because it'll give us some clues, or may give us some clues about the potential of what the U.S. markets are going to do, at least the NDX 100, which is trading in an A to B equals CD pattern to the upside. That's the very right-hand panel chart out there. That doesn't mean you sell it. What that means is just be aware that if a bearish reversal candle were to form, then we would have a sell the D-point pattern and likely would see price go ahead and pull back further.
Fantastic. Steve, do you have some time for the next segment?
Yeah,
or is that
I can just for a few minutes. Probably
Absolutely.
not the entire segment, but I'll try to be as quick as I can.
Fantastic. Steve, please stay right there, folks. We'll be right back with Steve Rhodes after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You watch the Tom O'Brien Show. We're joined by Steve Rhodes for a little bit of this segment. Steve, we were looking at the DAX before we went to the break. It seems like you might have the NDX charts up right now.
Yeah, because, so the DAX, we also took a look at is the directional correlation that exists between the DAX and the NDX 100. So at the same time, the DAX is showing a top. The NDX 100 charts are suggesting that we should rally further. We're taking out its TD9 count top. It does have the A to B equals CD pattern. So if we were to get a bearish reversal candle, that would change things. Otherwise, price is likely to rally up towards its all-time highs out there. That's the NDX 100. The S&P 500 charts are also doing the same thing, negating the daily TD9 count top. The weekly chart looks very bullish. It's all suggesting getting back to its all-time highs. Now, in the S&P 500, there is some resistance up around the 59.26 level. And the Dow Jones, its resistance area is really at the 43.309-ish area. That number is going to change as price moves up and down. But here we've got all three daily time frame, S&P, NDX 100, Dow Jones, negating their daily TD9 count tops. And they are all suggesting a further rally that should ensue. If we take the semiconductor index, something everybody else trades here as well, that too is suggesting that we should rally further out here. In fact, it should suggest that we get back to its all-time highs. Now there's some slight resistance potentially to about the 50-41-ish type area out there. This is also going to be day number 4 in a row of a rally to the upside in the semis. Typically after a 4-day move, you get a 2-day pullback out there.
Sure.
So if we do, I don't want folks to think that that's the end of it, but I'd be watching for those bearish reversal candles in the S&P, the NDX 100, or the Dow. I lastly really wanted to be able to share with folks what I see as far as going on with gold. As you know, I've been on the show and I've been offering caution. I've been offering caution because of the tops on the daily, the weekly, and the monthly time frame. That typically leads to some type of retracement out here. The real key levels for folks to watch, price is trading, kind of tinkering with the bottom of its daily profile out there. Not as much concerned about that as I am the center of its bearish structured weekly profile. And if we get closes below 32.1030, certainly on Friday, if we get that, but we might get an intra-week out here, that would be suggesting that gold could be setting up a run for the 28.94 to the 29.70 level out there. So there's tops on the daily, weekly, and monthly time frame for its contract. At the same time, what we know is that the premium in gold has more to do with geopolitics and wars, specifically wars. Here I've mapped out how gold has responded to anything that's happened in Ukraine, as well as what took place in the Israel-Hamas attack in that festival. And we can just see the premium that has shot up there. And what concerns me about the Middle Eastern piece of this puzzle is that if you're looking at this chart here, my cursor lines are all at this exact same day. All new all-time highs were formed in Middle Eastern currencies, and we've traded off of that. So when we start, you like to see an instrument that's in bullish mode, moving higher in all major currencies. Here I've gone down to some of the minor currencies, but you also want to be careful when things start moving south altogether out there. This suggests that maybe there's something positive that could somehow come out of the Middle East out there. Maybe it's probably only for a short term, right? I mean, it's been going on for 5,000 years, so no reason for it to end anytime soon. But, But anyways, so that's what I've seen in the markets and wanted to share that with you. Any questions or anything that I can answer?
No. It's always great looking at these charts. I love seeing different assets priced in these different currencies. I think that gives us some great kind of insight. And what a phenomenal rally to the upside that we've been seeing. So, Steve, thank you so much for coming on. We're looking forward to seeing you tomorrow at 11 a.m.
You bet. Thanks, Jake. Appreciate coming on early.
Thank you. All right, folks. Additionally, or further, rather, you can go to TFNN.com, newsletters tab, check out the Mastering Probability newsletter by Steve Rhodes. If it is your first time doing so, well, you're in luck because we do have a 30-day money-back guarantee. If for whatever reason the newsletter doesn't work out for you, I'm betting that it will, but you can do all of this risk-free, and I know we have a lot of new people listening due to all of the market action. So get in there, check it out. We'll take care of you for sure. Really, check out Steve again at 11 a.m. Eastern time. If you like all that kind of stuff, then you're just going to love the newsletter. There's no other way to say it. All right, let's take a look right now. Yeah. I mean, look at this thing, right? This is a massive gap up. We're trading at 581 in the SPY, trading up 3.12%. Composite trading up 4.16% at 18,674. Dow Jones Industrial trading up 2.7% at 42,364. Fletch Poly Market betting on recession is collapsing. Yeah, I mean, look at oil. Okay, at 1.28% in a huge way. That's not recessionary behavior. And then your 10 years are just skyrocketing right now. You're 4.45% in the 10-year on yields right now. Yeah, your junk bonds are getting purchased here, okay? Which is, again, I think this concept of recession kind of goes away with this, right? That massive smack of contraction you get in economic output, is no longer influenced, at least, in the minds of everyone, by these super high tariffs. So the tariffs coming down to some extent. What is it? 30% on goods, and the Chinese tag at 10% on ours. It seems like, again, the data isn't extraordinarily clear. I think right now it seems like maybe vehicles are not exposed to this temporary reduction. Again, this is a 90-day reduction as a real deal kind of gets worked out. But this is not, behaving like there's going to be a recession at all. And of course we have CPI out tomorrow, and we'll see what happens like that. Of course, you have some companies who are firing their workforces. But listen, I mean, looking at this movement in the bonds, I mean, it does not indicate that there are going to be rate cuts at all. Additionally, you have this bill that the Republicans are trying to pass, which I'm sure everyone will vote on because Congress likes spending money, to increase the debt limit substantially. And of course, Besson said this as well. It's like, listen, it's not, mystical or anything like that. We're going to have to, reissue, essentially, to pay off some of the debt. So that'll get reissued at a higher level. Of course, that makes things less appealing if you're holding bonds. And I mean, this is some pretty stark movement down. For the 10-year, 30-year. I mean, this is happening globally as well, right? So, yeah, it doesn't seem like that is going to occur right now, So instead, what you probably get, if you don't get massive upticks in unemployment because your tariffs get eased a little bit, right, and economic activity keeps flowing, what you're really left with is most likely inflation, right, to some certain extent. you could see that behavior in the bond market a little bit, or that sentiment being reflected in the bond market. Of course, you're going to get generally equities moving up with things like that, Now, cost to finance, of course, becomes higher, and that can kind of reel in spending, but it doesn't seem like it does right now, at least. So, my whole kind of take on this right now is I think it's edgy. Certainly some major movement to the upside, coming off about 0.12% right now. This keeps moving forward, right? I mean, you had this massive lag on equities because of the fear of global economic contraction. And it doesn't seem like that's going to be the case. And companies have posted okay profit. And we're spending more money on things like tokenizing assets and, Meta opening a new line for cryptocurrency. It's wild. It's wild times. Folks, they'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup, watching the Tom O'Brien Show. Additionally, take a look at gold. You're off 3.07% at 3,241. Just testing its recent dip as well, right? You get a rejection on this. Be kind of interesting to see what happens with gold on that. Silver trading off 0.51%. Copper off 0.82% as well. Steel Dynamics roaring up 4.53%. Tesla trading up majorly, up 6.15%. You're reclaiming 1 trillion market cap with Tesla. Roku up 12.83%. Vuzi up 9.02%. Fubo up 6. I mean, you just have insane movement to the upside in everything. This is a massive pile into the market on that tariff development with China. I mean, you can't really argue against that, right? And again, like, earnings haven't been terrible. Still spending money on data centers, which is very nice. I mean, we've been taking a look at TSSI, which is one that I like a lot, trading up 10.91%. In TSSI, I think this is a nice company. They do data center build out, and then servicing as well. They get a lot of their contracts from Dell. I mean, man, even like small little freaky stocks are rallying today, you know? And again, you know, there's just so much just money is out there. I mean, this is really the answer, you know? I mean, people have been essentially risk on in a major way since this news day, right? This one right here, where the fake news came out, okay, whatever, and then it ended up being real, which we got here, and people have just been risk on since then. So we come out with the CPI number tomorrow. In reality, I think it'll probably show some kind of indication of, I mean, I don't know, you've had some food prices come down. Of course, oil was a little bit suppressed last month, so you might get some, you know, greater contraction in energy, but that will be for volatile CPI. We'll see what the core is, but you know, in reality, I mean, you can see what the 10-year yield's doing. I mean, this is not indicating any kind of, you know, major slowdown in economic activity. And again, you know, increasing, I've got to get the number for the Republicans, something like 4 trillion. Yeah, it's like they're trying to increase the budget by an insane amount of money. And I mean, it's just going to put more money into everything, you know, and this keeps running. Now, you know, obviously our next leg, right, is really these insane triple tops you're having in all the indices, and we see if we can sustain movement to the upside here. You know, you might get some level of profit taking occurring, but, you know, bar any kind of massive deterioration, at least in, you know, the short term of talks with China. I mean, this, you know, on a safe end, you know, this whole thing is weird to me, right? And I get it rallying on the development of trade talks with China, and I guess a lot of people are seeing that, and you're at somewhat acceptable level that could say, all right, if you sweep the board, right, and you start off at a place where we had 0 tariffs before all this was announced, right, is this kind of an acceptable area to be with, you know, these 30% tariffs added? I mean, it at least gets some trade going on. There might be, again, a level of exuberance here, but, you know, do we get this massive crater down back to the 14,000? I don't know what would do that, right? Obviously, you're not getting interest rates cut, but I don't think a lot of this is necessarily, you know, predicated any longer on the quote-unquote printers coming back online. Money supply is still growing. There's still a ton of capital that just exists that needs somewhere to go. And so, you know, I mean, do we get this kind of bearish feeling that I've had change a little bit? And, you know, to some extent, I mean, you certainly definitely will get pullbacks over this time, but I mean, a lot of the major fears, at least we've been talking about on here, that could really see a massive contraction in the equity markets, is kind of up in the air now, right? So, I don't know. We'll see what happens with that. But this is a great day for the markets here for sure. I mean, this is, again, just an example of people have been wanting this market to come back. You know, dips were bought every time. There's a lot of gaps just not filled even slightly, right? And I'm not saying things have to fill gaps, because they just don't, but they can tend to sometimes. So I don't know. We'll see what happens. I would love to buy some more on pullbacks. Taking a look at some of the equities we've been talking about recently. You have TTD. Okay, that's trading up very nicely, up 12.33% again today. This is on some okay volume as well. Yeah, I mean, what else is there to say? Again, they had fantastic earnings. Their forward guidance, again, were very good. They had a huge sell-off, somewhat of an overreaction, in my opinion. This is, of course, a massive gap they will have to fill, but you're really testing the end of that gap quite soon. You're at about $85 in it. Listen, I mean, again, as we've spoken about with this equity, you have this massive fall down on kind of a bad quarter, which is very unusual for the equity itself. Now, again, you have to consider the potential for price movement as well when you're looking at stuff like this, but you are back on track to be kind of trading to where we were trading November, September. So this still has, if that sentiment still exists and it doesn't look like we're having any major contraction in the economy, this has some nice movement to the upside. Now, this will be over time. There's a lot of energy in these past, let's say, even 3 days, right? So that does kind of peter off a little bit, but they're right back on track to be trading where they were trading prior, right? So I'm really blown away by how strong this market is for sure. Taking a look right now at Lucid, trading up 3.78%. Tesla as well, up 6.03%. One of the things that will be strange to see with some of the electric vehicle companies is in that bill that the Republicans are trying to push for the budget, they're looking to end the EV credits early. It does not necessarily, I mean, now this is a pretty wild wick both ways for Lucid, but it doesn't seem like that's necessarily affecting anyone. I think this is a very kind of exuberant day. I get worried that you can, find something here. Remember, we were speaking about this a little bit, where the last kind of bear flips, right? Like you've been holding out, and you see these levels, and it's like, fine, let's just buy in. I still think there are obviously some headwinds with the reissuing, and certainly in things like EVs. But I mean, look at it. You can't argue with the price movement in something like Lucid. These have been 2 phenomenal days of volume to the upside. They're going to be making their cars cheaper for people to buy. They could absolutely exploit the niche that's created by people no longer being attracted to Tesla due to any kind of reason. So you're seeing that reflected a little bit. Yeah. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup, watching the Tom O'Brien Show. Man, kind of a fast hour, huh? Let's take a look at Bitcoin right now, trading off 1.67% at 101,900. You've had a lot of liquidation in the past 24 hours. This, of course, could be level of profit taking. Kind of makes sense as well because you're seeing Ethereum run very heavily. Same with XRP. Ethereum is running off right now, off 2.35%. Let's see what XRP is doing. 4.9%. Yeah, you're getting some kind of sell-off here. And a lot of them. So some of the news that's happening in the crypto world, of course, one of the big ones that I think we should just talk about is what happened today with the SEC. And they had it's called the keynote address at the Crypto Task Force Roundtable on tokenization, right? And this idea of tokenizing real world assets, RWAs. Hong Kong has done this now. If I can get the info up for it. And I'm promising there is just a lot of news coming on here. Yeah. So, okay. So Guotai Junan International plans to issue various types of tokenized securities in Hong Kong. The company is a subsidiary of Guotai Haitong Group, large securities brokerage. Companies aim to use DLT for insurance, trading and custody, as well as enable greater personalization for wealth management products. Given its ownership, the news is notable. China has plans to create 10 large security brokers. Okay. Regarding digital bonds, it hopes to become overall coordinator of some bonds issuances, even a settlement bank in the future bond issuance projects. Yeah, so really what I see this doing for America, minus that kind of part, is if you establish stable coins, right, which I think at least international trade will have something akin to that. These things will add bonds in a major way. And I think we're still kind of in an environment where the reissuance is still going to occur in June. You have it starting to begin now. Obviously, 10-year rates are extraordinarily high, and something kind of needs to absorb that a little bit. I think that's partly why you're seeing such a big push for things like Basil and Trump to kind of do this. Trump comes out and says, hey, people, want this kind of stuff. So he's going to do it regardless. Again, I think a lot of it is that it'll absorb some of the floating bonds out there. Tokenization, in my opinion, is a good thing in some capacity, right? A lot of this will be kind of like fractional shares in a sense. I think you can get people overseas able to buy U.S. equities. This, of course, is very bullish on U.S. equities. I mean, I guess it depends how you think about it, right? It can rapidly get to a point where a lot of people consider it overvalued. And that is a valid kind of thing, but you can't argue that you have a lot of extra liquidity now coming in into the equity market, right? Via the route of tokenization. So if you're a European, okay, you can't really buy US stocks, or it's very difficult to do so. And so you can go to some place like Robinhood, and I'm sure, there will be tons of little companies that will kind of do this. You can go to Robinhood, trading up 5% right now. This is amazing traversal for this equity, seriously. And give them money, they'll have a fund, okay, that will be full of whatever equity people kind of want, and you'll just buy the token to get exposure to that fund. Of course, there will be a lot of novel ways this will work, but that's kind of like the big fundamental behind all of it. Additionally, you have a lot of bullishness just over Bitcoin in and of itself. Now, again, I know you're seeing some kind of sell-off right now in it, back up to 102,000. But, to give you kind of further bullish support from administration, you have some of these smaller stocks that are miners, right? Backed by the Trump family. Again, I think he has another Trump coin coming out, one, but then things like Hut, for instance, which is a Bitcoin miner, is up in a major way. You're up 10.76% due to a deal with a Trump-linked subsidiary, which is American Bitcoin. They have exposure to that. If you look at it here, Hut reported that it'll take a majority-owned mining subsidiary, American Bitcoin, public in a deal with Griffin Digital Mining. This is another one that kind of just went huge. BlackRock was discussing today the idea of tokenization, concepts of Bitcoin. You're up 188,000. Point being is there's a lot of bullish discussion around cryptocurrency right now, both Ethereum and Bitcoin itself. And then additionally, you get discussion from Meta coming out with their own crypto. This is a leak, supposedly, right? So this is not confirmed at all. But leaks reveal Meta plans to add crypto support for 3 billion users. I believe they're going to put that on the Ethereum chain. Now, that doesn't necessarily increase the price of Ethereum coin like directly, but that's bullish for the platform itself. So I don't know. You're getting like this massive narrative shift right now in the markets, right? Away from the consequences of things like tariffs. Of course, that's gone away right now. And you're getting this kind of renewed toppy discussion that we were seeing in November and January, right? Like nothing has happened at all, and new developments are being pushed forward. Now, you're getting some selling off kind of right now at the end of the day, but it's getting bought just immediately. Yeah, I mean, so this is just keeps getting bought, Quite seriously, very interesting moves and everything. I think liquidity's back in some capacity. I mean, even these high interest rates haven't really stopped that. And them going higher, even if the basis points, if the Fed fund rates get increased in the event that inflation is higher for longer, I really don't think you see a massive contraction. I don't know what they do about the reissuance at these levels. I mean, in theory, what will probably happen is they'll just kind of do short-dated bonds, right, like Yellen did, but it doesn't seem like the market cares at all. And you still have a lot of money that's in money market funds. If they get some kind of FOMO, I think that really happens at that level. But there's still a lot of capital that can flow into these markets and pump some stuff up. Take a look at earnings right now. The one that's on my list is going to be New Holdings. I do not own any, but this is one that has quite a cult following online. They're like a South American bank, bringing a lot of unbanked people in South America into that kind of fold. So you're 0.58%. We'll see what that happens. I think mainly inconsequential for the American market, but it'll be interesting to kind of see. Of course, you have Tencent coming out as well. Trading at 1.95%. Sony on tomorrow. Cisco, CoreWeave, which has seen an amazing reversal in price, even after saying that they were going to increase debt. trading up this right here, up 13.16%. And on that note, too, with compute renters, take a look at Nebius, our boy Nebius, rallying in a major amount today, up 17.58%. Stay right there, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup, watching the Tom O'Brien Show. We just got a short segment left here. Take a look at Nebius stock, up 17.76% right now. Of course, you're getting some investment in Tolikai as well. I think we have some earnings coming up. The information on their mixed shelf offering has still not come out yet, but of course, doesn't matter. This equity is very strong right now. And again, I think this is just further reflection of a kind of easing of anxiety in the market, especially with the Trump tariffs resolved, at least to some sort of extent. I don't want to say resolved because they're not, right? I mean, they're still like 30%, right, on some of this stuff. China, of course, has lowered it as well. And what they're pushing for is a complete resituation of how American, Sino-American kind of relations are, where they want this kind of equal transfer of goods across the board here. So regardless, whether you want to call it panic buying, whether you want to call it relief buying, whatever it is, Giving a lot of this stuff movement to the upside. Some of the segments that Nebius has exposure to as well. And again, Nebius, as we said, has exposure to a lot of small different companies. You have that AI company, you have the self-driving company, whatever, further data storage companies. These things keep getting valued higher, and that is adding to Nebius's market cap, which is why you're seeing at least this movement to the upside today. But very strong, great movement for Nebius in a big way. You kind of have this gap you want to fill a little bit, but this is a strong equity. They still are spending money, and I do expect once some more financing or clarity on their financing activities becomes clear, you probably will get a little bit of a sell-off in Nebius. It'd probably be an okay time to get into it as well. Folks, thank you so much for joining me. I hope you all have a fantastic rest of your day. We'll see you tomorrow.